Are you ahead of the game? Keep up with the latest news and commentary on markets, regulation, and more. 2 wikis, video content, 7 newsletters, and blogs right at your fingertips. JohnLothianNews.com.
How has the FX space been changing?
We've seen a complete transformation of the spot side of the business over the last 12 years into complete electronification. I mean, obviously the majority of the market now is traded fully electronically, and to the point that the original banks that were very much at the core of the market are now a minority of the volumes traded in spot. And the market seriously relies on Chicago-based or Amsterdam-based or London, New York type prop shops, market makers to provide the liquidity.
How has the participation base changed?
Before the electronification, banks, corporates, and asset managers really was the composition. And then with electronification came the entry point for a variety of prop shops, market makers from Chicago and other locales around the world that were normally bound to exchanges. Now they could access the OTC market. And clearly systematic strategies were developed, and a number of systematic trading shops entered the market as well.
How do you see the FX market changing?
The current volumes are a reflection of sort of long-standing trading habits, if you wish, or of existing institutions that are part of the market. And any new participants that join this market will inevitably add to the volume of that market. And as a result, we do expect immediate growth in the market, and we're seeing that already.
What's driving users to your market?
The biggest driver that attracts people to this market is the bid-offer spread, especially from market makers, prop shops perspective. In equities, the margins have become razor thin for equity option participants, and for anybody looking to collect that bid-offer spread, it's almost unattractive.
How does SURFACExchange fit into this changing demographic?
We effectively start looking for the holy grail of being able to marry the flexibility of the OTC market with the beauty of the exchange model, if you wish. And that's the challenge we decided to take on SURFACExchange. And it wasn't an easy challenge. With our business model approach of electronifying expirations and taking the responsibility of taking the message from the buyer and delivering it to the seller, people can now break up their trades into smaller pieces and be able to and with the anonymity in place, they'll be able to get the same exposure without the risks of having a very large ticket on the book or having too many tickets on the books.
How does SURFACExchange differentiate itself?
We offer OTC, fully customized. You can trade any date, any time, any delta, any strike, any combination of options. We're only focused on vanillas for the time being. And any interest, including any of the customizable interests, when an RFQ is sent, we create a basically on-the-fly matching engine for that, or central limit order book. And anybody can provide liquidity or take the liquidity for that custom product if they like it. So even though you may have not asked for that particular interest, if you like the liquidity that was created for it, you certainly can participate.
What's the impact of Dodd-Frank on SURFACExchange?
SURFACExchange will be a SEF, and in fact we're gearing up very actively for that at the moment. There's the regulatory implications, there are the capital implications, there's the market surveillance implications, which we were all very familiar with, and in fact built into the technology completely at the moment. In fact, our users at the moment can see full audit trail of every action in the platform. So we don't have to prepare technologically. However, there's a lot of legal and operational things that will have to happen at the point when SEF rules are finalized.
Are your customers ready to make that transition?
There's a lot to be done. To be honest, the industry is not ready at all. I think the industry was falsely hoping that somebody will repeal Dodd-Frank or something will happen. The regulators are not ready either. And there is still obviously a lot of confusion at the Fed level, at the CFTC level. The rules might come out, but the details of how everything will work out and who's overseeing what is are still out there to be determined.
What's next for SURFACExchange?
We're adding spreads and premium-based trading to the platform this fall. We'll be adding NDFs and NDO following that, which obviously is another very high level of market anticipation and also centrally cleared requirement for those instruments as well. Our focus is solely on FX and will continue to be so, but we don't rule out the possibility of potentially, with the right partner, branching off into some of the other option markets that require this kind of sophistication.